All this is happening in the backdrop of the summer, RJ. So when I read it's going to be a big week, it is, but I'm not sure it's going to feel like that because you just can't, late July, early August, everybody's just kind of sleepy. But pick the biggest data point, biggest development this week that the markets could key off of, RJ.
Well, interestingly enough, we're heading into a Federal Reserve meeting week, and it feels like the conclusion is baked in. Usually Fed meetings are pretty high profile. This certainly is. But the spotlight on the Fed now is whether or not they'll deliver and meet the market's expectations, not whether they'll ease or not. I think everybody expects that. There's still some question of 25 or 50 basis points in terms of the size of the cut. I think maybe more important is what did they say? Our view here, we think they'll cut 25. An insurance ease. It's a calibration of monetary policy, given that they probably tightened a little too much at the end of last year. But what do they say? Clearly, the main focus is beyond our shores. The U.S. economy is in pretty good shape. People usually wouldn't complain about 2+ GDP and inflation below 2. It's just not that bad. But there are plenty of risks beyond our shores, from Brexit to a clear global deceleration and global growth. So the Fed is huge. I think the jobs data would be the second thing I'd focus on. Jobs have been a bit sawtooth of late. They've been strong, but up strong one month and a little softer the next. I don't think any one jobs number is going to change the Fed's mind, however, because economic momentum in the U.S. is good. The focus is abroad.
So the whole reason for the new transparent Fed is so we're never surprised. They're telling us 25. It's not going to be 50. It's not going to be 0, right?
I tell you, though, Joe, it's interesting that I still talk to a lot of people, and you still have people betting on 50 in the market. And that surprises me because I feel like the Fed has been clear in sort of telegraphing why 25 makes sense, but yet you still see the markets betting on 50. A lot of people even looking at some of the signals that the Fed has sent and suggesting that maybe they've backed the market off to expect 25 so they could deliver 50. So there is speculation about a larger move. The thing I think is interesting, though, and RJ, I'd be curious to get exactly what you were talking about. The other question is, what do they say? And will they be able to sort of outdove the markets as they've done, in previous meetings? That's really the question. Can they do enough, given what the market is expecting, to actually meet or exceed expectations?
I think they can. I think when you look at the Federal Reserve under Powell, they haven't been wed to their position, to put it lightly. It wasn't that long ago that I was on this show. We were talking about Fed tightening. It's been a complete 180. I think Chairman Powell has been very clear. I think he's used the analogy of walking in a dark room with respect to the FOMC's use of interest rates to try to find R star, the equilibrium interest rate. And since he doesn't know where that cabinet is or where the chair is in that dark room, he's pretty modest in terms of his profile, in terms of how confident they are about where they're going next. Right now, inflation is 1.5, 1.6. The target's 2. They really can't seem to hit it with any sustainability over recent years. So right now they can afford to be asymmetrically pro-growth, asymmetrically focused on addressing risks, even though the U.S. economy seems to be all right. Well, that means that his terminology, what he says up on the at the press conference, I think can say, look, we're going to react. We're focusing on what the global economy is doing, not just the U.S., and we'll react accordingly. And I think as a result, they can be dovish enough, even if they just do 25.
Well, they could easily
it's not just the rate move.
I mean, there is an argument for 50 because they never do just one, because it's always a series of rates. So it's like if you got an infection and I'm going to give you a half dose of penicillin. Maybe it'll work. If not, we'll give you the other one. Why not just knock it out?
Well, and that's what the New York Fed president had stated, which got the markets all excited for 50. When you see the lower bound in view, you want to act more aggressively.
Quickly.
You want it. Exactly.
Except people would say, "Oh my God, the world's ending. The Fed's got."
I think we're beyond that time, though, when people actually say, "Oh, the Fed must know something."
Right.
Unless there's really indicators of financial stress.
We know they know nothing, and they're always responding.
This is not a bigger sign. I agree.
Right.
So the leaning toward 50 could just be, if this is a technical adjustment to get the short end yields down to where it makes sense relative to the rest of the world, that's why 50 maybe 50 and say now we're patient, now we're on hold.
But is that a positive? Does the market like 50 and a signal that that's it, or do they want 25 with expectations and signals that they're going to do more?